The Harmonized Tax Law positions Indonesia's tax system for a major overhaul. This new law, which was ratified nearly a month after Indonesia's House of Representatives passed the Harmonized Taxation Bill on early October 2021, seeks to optimize revenue collection and improve tax compliance to boost the country's recovery from the COVID-19 pandemic. It is certainly a step in the right direction, but any changes in law are never without opposition. The new provisions in the Harmonized Tax Law will contribute to increasing tax revenue with a few key challenges to overcome in order to enforce compliance. Seeing the state of the economy, it is no surprise that the Harmonized Tax Bill was quick to pass. As an E7 country and part of the elite G20, 20 of the world's largest economies, Indonesia had been making strides to reach the status of a developed country, with estimates that Indonesia's market would grow as early as 2024. Of course, the pandemic was not kind to anyone. Presidential Regulations Number 72 that was issued on 24 June 2020 was addressing that the state budget derived from tax for the 2021 fiscal year dropped from 1,229 trillion rupiahs to 1,142 trillion rupiahs. With the business sector playing catch-up and the government struggling to cover costs caused by the pandemic, something needed to change. This is Guma Channel, and we're gonna give you a quick update. Harmonized Tax Law. Hope from increasing tax revenues, but not without challenges. Cue the Harmonized Tax Bill and preceding the law arguably being a strong indication that these changes are intended to help the economy rebound by increasing tax revenues as the new law alters several core provisions. Changes on personal income tax, corporate income tax, and value-added tax. Though some argue against the timing of the law and the changes in tax rates while the economy is still fragile, the Harmonized Tax Law has the potential to generate up to 250 trillion rupiahs for the state coffers. A review of the law makes one thing clear: VAT revenue will be the highest contributor. By tariff increment, the VAT rate will gradually increase from 10% to 12% for almost all goods and services. The current rate of 10% will raise to 11% in April 2022. The rate will rise again to 12% starting on 1st January 2025. However, the exemptions to the change in VAT rate include staple items, healthcare, educational services, and social services. While VAT will be the heavy hitter in generating state revenue, changes to individual income tax and corporate income tax are not insignificant. Individual income tax will be lowered, contributing a minor amount and showing the most benefit to taxpayers. For example, at the current rate, an individual with a taxable income of 54 million rupiahs would be required to pay taxes in the amount of 3.1 million rupiahs. Once the Harmonized Tax Law prevails, an individual with that same taxable income would only be required to pay taxes in the amount of 2.7 million rupiahs. In today's economy, every little bit helps. And how about the corporate income tax? Finally, it will stabilize at 22%, canceling the previous plan to change the rate to 20%. This is actually a welcome drop from the pre-pandemic rate of 25%. After COVID-19 began wreaking havoc in Indonesia, the government lowered the corporate income tax rate to 22% in an attempt to help businesses. Further tax cuts were adopted for specific industries, bringing the rate to 11% for some. However, the Harmonized Tax Law dictates that the prevailing rate moving forward will be 22% for all industries. In response to the new tax rate set to prevail in 2022, there has already been pushback from disappointed taxpayers who do not agree with canceling the planned 20% corporate income tax cut. Though, to be fair, there is some reciprocal benefits from the taxpayer perspective. New tax changes have the potential to streamline the state budget and contribute to appropriate allocation, distribution, and stabilization. This will be a key element in providing much-needed support to corporate society, professionals, trade unions, and pressure groups that have been asking for these changes for a long time. The main concern from opponents is the wider economic impact from VAT increases. Estimates show that public consumption and real wages index may change -2.05 and -6.2 respectively, though import will show growth around 3.3. Several sectors may be negatively affected, especially utilities, which has the lowest projected sectoral output of -3.24. Additionally, there will be significant impact on changes to indirect taxation. From a regional point of view, the Indonesian indirect tax rate will increase competition among ASEAN country members, something many industries need to begin preparing for. The question that remains is, will the government overcome the technical challenges of enforcing the new law? Right now, the technological infrastructure is not where it needs to be, and both taxpayers and government will need to adjust. Not only will taxpayers be required to make changes, the Directorate General of Taxation needs to adjust the system used in the business as usual. These necessary alterations may create significant costs for both sides. The upcoming 2022 year will bring with it a lot of much-needed change to Indonesia, primarily in the form of the harmonized tax law's new rates for individual income tax, corporate income tax, and VAT. It has the potential to boost a pandemic-strained economy with significant economic changes that many businesses will need to plan for. The main goal of the harmonized tax law is to bring Indonesia's budget deficit back under the GDP cap of 3% by 2023. Despite concerns, outlooks remain positive, especially if the challenges of technical rationality, which covers the subject, object, tax base, and tariff, are overcome. The harmonized tax law might just be what Indonesia needs to move one step closer to developed country status, and struggling taxpayers will benefit from the small change to a lower income tax rate. So what do you think of all this? How will these tax law changes influence you or your business? Let us know in the comment section below. Make sure to like it, as now you know that every change could turn out way wider than you think. Why not subscribe, as we will keep on bringing more great videos like this. Until next time, see ya!
Thank you for listening to Gemma Consult. If you liked the show, make sure to subscribe right now so you're first to hear new episodes. With new motivation on how to take your entrepreneurial dreams to the next level. We're here to help each other grow to new heights. If you know an entrepreneur who would benefit from the support of our community, please share the show with them. Thanks for listening.